Good morning, everybody, and this is your S&P 500 day trade setups for today. So the trend line has been tested. You can see been tested with a pretty strong, not really a pin bar, but we do have a small bodied candle with a long tail, which indicated there were buyers coming in off this trend line break retest. But we obviously, for this trade to play out to the upside, we'd need to get above 43.50. That is the high of this bar. And looking at the oscillators, I think you're probably looking for another leg down at the moment rather than this holding. If we move across to the 3 hour, you can see we're already crossed over, we're already moving down with the oscillators. And what I would do here is put the next level in, which is pretty much right over here, and that is 42.66. So a couple of things to keep in the back of your mind. The first thing is that this inverse head and shoulders are still in play. All that's really happened is that the right shoulder is a little bit higher, and then if you go back to the left, you'll see there's another shoulder there. So this is still very much in play. So 43.96, probably 4400 would be the better bet. That is the break that we're looking for a move to the upside. If you can't get that, then we're looking for a break of this structure here, 42.66, for a move to the downside. Until that happens, I suspect we're probably going to be sideways in between those two levels. So if you look at price action for yesterday, we sort of just hovered around, came back down to 155, was a small buying opportunity there, but then again, kind of drifted lower. Looking at the oscillators at the moment, it is indicating that this trendline test is more than likely what we should be paying attention to. Now, I just need to add another level in here, and that's this swing low here from yesterday. You can see how we broke below it, tested the trend line, and now we are testing it again. So from an hour perspective, in actual fact, not an hour perspective, probably more likely a 15-minute perspective, what you're looking for is for this level to be regained, 43.26. If you can get that to happen, then you do have a reasonable trade to the upside, probably something like that. So 230 points, and if this is a low, it's a 230 point stop loss. So very, very messy still, and you can see, we had a fairly quiet Asian session, and then from a European session we dropped. US session we tried to climb, but all that happened is every rally was sold into, and we came back down to test this trend line. So I'm a little bit cautious. Well, I've been cautious pretty much for the last couple of weeks now. And I think the chaos in Russia is still what's driving this, and then you still got your economic issues as well, which hasn't really sorted itself out. So it's going to stay like this. It's going to be really, really difficult to jump in on a trend, because it's not going to be really a trend. I think there's a lot of people that are seeing value at some of the stocks at the levels that they are at the moment. So a lot of people piling into stocks, which obviously impacts the S&P 500 as well. But for me, this is a wait and see. I need to see us break clearly above 4,400 before even looking for longs. Until then, what we should be doing is going with the trend. And if I look at the hour, we don't really have a trend. We're just here in amongst the moving averages. Bear one thing in mind: when the moving averages squeeze together like this, it normally indicates a move of some sort that is brewing. You can see here was the last squeeze, and the move was the downside. So for as long as we're below the 155 EMA, trend is down on the hour. So at the moment, even though the moving averages are flat, we are below the 155, and we are testing it. We've tested it twice. So technically the trend is down. So any structure that you see that favors the bearish side is definitely something that you want to be playing to, but that is only when Europe opens. That's kind of the narrative that I've got at the moment. So pay attention to these levels, and on the 15-minute you're going to find little spikes above and below moving averages. So just wait for the hour levels, see if the hour level is rejected on the 15-minute chart, and then you can take the trade based on that. But I'm kind of from a scalping perspective, this is looking like another leg down, more than likely to come back down to this 42.66 area. Anyway, that's it for me today. I hope it helps, and we will catch up with you tomorrow morning. Cheers for now.